if we look at all of like fraud, financial crime, it was something like $8 trillion. Like it was an unbelievable amount of fraud that happens globally. And so, banks are the ones who primarily have to deal with that. And so you are seeing AI being deployed in ways where, to some degree, they're trying to keep up with the bad actors, right? They're trying to deploy.
Now, as we get before we get started, can you give us a little bit about your background and the company?
Yeah, absolutely. So Sendero is a management consulting firm. We were started right here in Dallas and have since kind of expanded to offices more nationwide. As a firm, we focus on clients in our area. So being in the Dallas office, I tend to focus acutely on companies within DFW. And then for me personally, I'm a part of our financial services core team and practice area. So I focus a lot there, as well as our utilities practice area.
Oh, nice. And I'm sure it's probably a good place. Dallas is like kind of the hub of Texas, correct? Still?
Oh, absolutely. I mean, we do have offices in Houston and Austin, and each have kind of their own flavors in terms of industries and cultures. But Dallas is our biggest office by far.
Okay. And I know the finance industry and banking industry in general is evolving as time goes on. AI is becoming a big part of that. But one thing that you said might be going back to basics is that in-person banking situation. Is branch banking coming back? Is that cool again?
Yeah, it does seem that there is a real push and real investment by large financial institutions in revitalizing and expanding the branch presence. And I think a way to think about it is the branch is going to shift from being that kind of transactional center to more of an advisory center. I think when you think about situations that involve a lot of trust or complexity, you can look at it, across kind of individuals. But the overall sentiment is that customers still want to be in person to talk to that advisor. And so I think banks are clearly picking up on that and shifting to kind of that more modern, welcoming kind of advisory center and less of a location to make deposits or do transactions.
Okay, so you're going to see more of that brick and mortar type of thing kind of popping up again.
Oh, absolutely. Yeah, I think, each of like the really big banks have signaled going that direction. I think Bank of America has stated they're investing $1 billion in that area specifically. And I think it is, it's interesting and that it's in a time where there is this larger kind of commercial real estate debt crisis going on. And I think for those who are in, the banks are in that market and having to deal with it to some degree. But for those who are looking to purchase commercial real estate, it is a very prime time to get good value.
And now another topic is AI. I mean, that's expected to have significant impact in the financial services industry, potentially more than other industries. What ways, how are we going to see that play out?
Oh, I think, similar to other industries, there's lots of really compelling business cases being worked on, being rolled out now. When it comes to financial services, I think on the, we're talking about customers so far, you will see that, digitalization has been a big theme within financial services for some years now, basically providing those digital channels for customers to kind of self-serve and interact with their financial institutions in more kind of personalized and specific ways. AI provides a real kind of tailwind in terms of the kind of efficacy and just efficiency of those capabilities. But then also, unique to financial services, there is a really kind of important and heavy regulatory burden. And so you're seeing some pretty, fascinating and interesting advancements in what's called like reg tech, but some of the regulatory technology to help institutions move into a posture where you are doing kind of a continuous compliance monitoring and easing the burden with which you're having to kind of produce evidence or work with examiners or otherwise. And then obviously there is a I was at a conference, a fintech conference in Atlanta recently, where they said last year the if we look at all of like fraud, financial crime, it was something like $8 trillion. Like it was an unbelievable amount of fraud that happens globally, and so banks are the ones who primarily have to deal with that, and so you are seeing AI being deployed in ways where to some degree they're trying to keep up with the bad actors, right? They're trying to deploy um, really kind of specific algorithms that can detect things like advanced money laundering or different types of financial crime in ways that they maybe weren't able to previously.
I did read something. I think the government as well, probably like IRS, Treasury. I think they're doing the same thing, trying to, prevent fraud.
There's some areas where they almost have to, just because the bad guys have these capabilities as well. So you just really need to keep up.
Right, keep up with the other people. And another thing mentioned was private equity deal values. Are they down in the current economic environment? What's going on there?
They are, and we've seen that correlated with kind of the broader economy and some of the during and post COVID. And I think within the financial services sector, there's been a real chill in terms of kind of mergers and acquisitions amongst even banks, largely driven by the regulators, right? There is as things get increasingly, digital and exotic, and there are considerations like, onboarding cryptocurrency and otherwise. I think that there's just been a slowdown in terms of approving some of these mergers and acquisitions. And so I think, from the bank's point of view, they're all really kind of working closely with the OCC and CFPB to try to get clarity on some of these things to really, I hear the term like, what does it look like to just hit it down the fairway? Just so what is a kind of simple, straightforward deal that would get approved look like? And so there's a lot of attention there. And then back to the kind of AI of everything. I think if you're a PE firm and you look at the companies you've acquired, their valuations have definitely maybe been impacted by macroeconomic trends. But then there is the AI of everything of, hey, what is the value of this business now that we've got these new and rapidly evolving capabilities? And so I think from a private equity perspective, there's just an enormous amount of due diligence kind of being done in those areas, and working with, folks like ourselves or otherwise, to where if there is a company that maybe hadn't incorporated that into their strategic roadmap or plan, finding ways to do that quickly to help with the overall valuation.
Okay, so that's going to be important for them moving forward.
Yeah, absolutely.
And now we also have the evolution of customer loyalty. I know that's changing from what I hear, whether it be retail or banking. What are some, new things going on that's going to differentiate people, businesses with their customers?
It's definitely evolving, and I think historically someone may have had like their bank, period, right? And it's the institution they go to for their financial needs. As we've seen, the rise of fintechs and banks offering unique or digital products, it's far more common that a person has a number of institutions. They may have someone that they have their checking and savings with, but they may have a different financial institution that they're doing maybe a brokerage account. They may use a fintech to aggregate transactions and do kind of their budgeting, and amongst kind of many other tools. And so what's interesting is you have this, the term is open banking. Prior to everyone having these publicly available APIs, it was kind of a clunky, arduous task to share information between someone like a fintech and a financial services institution. That has changed dramatically. And so I think for financial services institutions, there is a need to participate in the open banking ecosystem, but also find ways to leverage that to kind of draw in more customers, to make sure that, by participating, you aren't sending customers to competitors, but really driving value by kind of aggregating kind of their full economic or financial picture. And I think there is, touching on some of the interesting AI use cases, I think there is, we will see kind of those kind of agents or that digital customer service where it is deeply personal. That if you leverage open banking, where I can kind of aggregate your full financial picture, if I've got, the secret sauce within my bank or otherwise to really kind of provide, kind of curated and bespoke products and services to you, that there is, you could see kind of that relationship really, really evolving. And then I think the other piece of this is just, we follow it at the firm and otherwise, but there's just the financial literacy component. I think, there's been progress. I mean, there's a number of, I could look up the number, but there are a number of states now have baked that into their curriculum, which I'm, extraordinarily happy to see and otherwise, but there's still a very big gap there. But when you look at sentiment analysis, there is equally a yearning for it. And so I think when it comes to customer loyalty, there is the piece of it needs to be personalized, it needs to be digital. Maybe I need to have that branch for those really kind of complex moments for me. But then there also is like, am I being kind of educated along the way, right? Am I being given the resources or is the institution seeking to ensure that I understand? And I think that's going to be a real differentiator for folks. I don't think people want to be kind of talked to or, oh, just trust me. I think they want, using those same avenues, someone to kind of help bring them along and kind of educate them to some degree.
Right. So they want to kind of be in the knowledge too as well, and kind of understand what they're doing and why they're doing it, that type of thing.
For sure. Well, yeah. And you're seeing, I mean, if you, my algorithm's probably biased to me, but like, you look on this short form content platforms or otherwise, there is a whole kind of hustle culture economy. There's a lot of financial advice that's being kind of thrown out there. And I think, I don't know, buyer beware, but I think that, some of these long-standing kind of financial institutions, like there's a real incentive for them to enter that space as well and to kind of contribute to that conversation. And I think the only reason it's been such a kind of growing content sector is back to that real yearning for folks to really feel like they have an understanding of how they can kind of build wealth and achieve their goals.
And now as we, as far as like, in the area that you work in, like Dallas and Texas, is there any types of things that we're going to see in the business areas or anything that's unique as we move into 2025?
Yeah, maybe biased, but Dallas is on a really exciting trajectory. And I think when you look at Texas generally, you often hear it's the business friendly climate, right? There is the, compared to others, there's a lower regulatory burden, not having a state income tax definitely attracts folks. But there's been, I mean, you look at the JP Morgan campus in Plano, massive, the Wells Fargo building an enormous facility out there in Las Colinas, Goldman Sachs making a huge investment kind of in the area. And so where like Austin, you see a lot of just startup period. Houston, you see like kind of that mix of energy finance. I think what we're seeing in Dallas is kind of the fintech financial institution collaboration. I mean, all the things we've talked about in order to really, do a digital transformation, in order to kind of offer these products that surprise and delight, there needs to be this collaboration. And what's been exciting to kind of see and be a part of is that really is happening to a major degree, kind of within Dallas. And so I'd continue to see that. And I think those are really interesting relationships to be a part of, that relationship between the startup, the fintech, and the larger financial institution. So I could see that continuing to be an area of growth for Dallas, certainly.